Hey guys,
How's it going?
and thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't. So let's get started. So guys, it's that time of week with our stock market weekly recap. If you're new, this is the time of week where we look back at the previous week to see what the heck the market did. And if you're returning, thank you, and hopefully everyone had a great week, because the stock market kind of did. It's about time, so let's kind of just get into it, guys. As you can see, the Dow is actually rebounding from the past couple weeks. It has been down. So it's going back up. It rose 0.73%. Not too bad. So we will be getting into the overall market toward the end of the video. I do have one really main question of what's going on, and it is something that we're going to have to address because with the federal government, it's going to happen soon. So as always, let's start with our portfolio, the stocks and mutual funds that we're holding together. With Apple right now, this week, they actually rose very nicely of a little bit over 1.5%. So our boys over at Apple on Friday, they closed at $159.86 per share. And you can see a little bit lower down, you can see our return. So far, this is the third week, so in 3 weeks we are up 2.22%, not too shabby at all. So with Apple and how large it is, you know, if whatever the market does, that's kind of what Apple is going to do as well. But one of the main things that's going on is the release of their new iPhone, the iPhone 8. I'm not going into too much research into it. Some people might be disappointed because it might be pushed back like a month or so. I say suck it up, let them do what they have to do to make sure it's awesome. So when that releases, I think their stock is probably going to go crazy. So obviously we're going to keep a close eye on that one, especially since it is in our portfolio. And it's going fairly well so far. So next stock that we're holding in our portfolio is Disney. And they actually popped, well not popped, they went up a little bit. About time, because they were getting slaughtered for a little bit. But they are slightly rebounding. You can see here they are up just over 1.6%. So with our chart over here, they did close at $102.41. On Friday, they were actually up close to 1%. Not too bad at a 0.88%. But looking down at our return since we got in around 3 weeks ago, we are still down almost 5%. So they are still lagging. So honestly, with these guys, again, they have been getting hit with earnings. A lot of analysts are looking at their ESPN numbers because they do own that. And those numbers are declining. However, there is a Star Wars movie coming out, so I have a feeling that's kind of just going to pop once that movie releases. There's basically a new series of Star Wars happening, so for the long term, I'm really not worried about Disney. Especially with those amusement parks, like, come on. Now, before we go on, a little side note, you will see that it has been fairly choppy this week, guys, because the earlier on in the week, that was when the rebound happened. Again, we'll be going into that a little bit later when we're just going over the overall market, like our S&P 500 mutual fund, basically. But let's move on to our next stock in our portfolio is Facebook. Facebook, it was actually not a huge move weekly. They were down just around 0.4%. Looking at our chart over here, they closed at $166.32 toward the top left. They were down 0.85 on Friday alone. But so far since when we bought them, again, you could see that even in the chart where it has that little notation thing, B59. So we bought 59 shares, again, because that's $10,000 of where we started at. And we got in at 169.62. They are down 1.5% so far. Now looking at the next fund that we have, or investment in our portfolio, which is actually a mutual fund, which I like a lot, is Fidelity Contrafund. Right now, for this week, they're actually up around 0.66%. Again, looking back at our little chart over here, they did close at $117.91 per share on Friday. And since we got in, they are down 0.9%. Again, Fidelity Contrafund has a bunch of the companies that we're actually looking over as well. You know, they have Apple, Facebook, even Amazon in there, Google that we'll be going over next. But they have a bunch of those stocks in that fund. So basically whatever those stocks do, that's what the fund's going to do. Definitely oriented around growth. And like we said, for the next investment we have going on is Google. With Google, they went up just over 0.5% this week. And back to the chart over here, Google ended up closing at $915.89 per share. I know it is up there, guys, but it is lower since when we got in 3 weeks ago. We are down 1.3% with Google. Again, I'm not really worried about any of these investments, guys, especially the things that we're talking about, since they're so large and that everyone knows and uses usually on a daily basis. Especially with Google, they're like the largest search engine. They own YouTube, and they have, you know, the latest phone they had coming out. It was pretty good, so long term looks fine. Now, something very interesting that happens this week, guys, is our next stock that we have is Starbucks. They actually got hit with an increased holdings from an analyst. So what that kind of means, for an example, you know, an analyst might say, oh, this stock is a hold. And then if they increase whatever they're thinking, it could go from a hold to a buy. So that's obviously attractive. Looking at the chart, that's why it actually shot up a little bit. For this week, they're up just over 2.5%. Awesome. So they were slapping us up a bit with Starbucks since we did get in. They closed at 54.36. Closed 0.78% higher on Friday. Looking at the returns since we got in, we are still down 1.95%. But if I remember correctly, like last week, even look at the chart to the right there, it was much lower last week. So it is actually creeping back up. And obviously you could see it still peaked at just over $64. So even if it rebounds back to that level, that is an incredible return. Now, I still think Starbucks is very interesting to look at, especially now because they kind of, I don't want to say bottomed out because anything could happen, of course, but they did go very, very low recently. So even if they rebound, that could be some interesting stuff, and especially to show you guys to see how that works. All right, guys, so let's take a step back for a second. Instead of looking at individual stocks like we have in our portfolio, again, we are looking at the broad market of the S&P 500. Again, 500 of the largest companies in America. So in the chart, you could see that it did pop on Tuesday. It did go up around, or just over 0.8% this week. Now, things are popping back or rebounding, whatever you want to call it. Things are going up this week, guys, because there is some optimism, good things in our minds, and especially with the North Korea thing. That was like 2-3 weeks ago. It's kind of fading away. I wouldn't even say it's like on the back burner anymore. It's kind of like off the stove. No one's really talking about it. It's real. The spotlight isn't on North Korea anymore. The fear factor, obviously, if we went to war, stuff started blowing up, that's negative, so it would drive it much, much further down. People are becoming more optimism, whatever. They're not fearful anymore. So they're kind of, more investors are getting back in. That causes the stock market to jump. Now, real quick, looking at our chart over here, the S&P 500 index fund that we have, it closed at $244.52. But we are still down 1.17%, unfortunately, but that's quite all right. So going back to that little pop toward the beginning of the week, or whatever you want to call it, it did go up fairly significantly. It went up over 1%, and they said that hasn't happened to the market like the last time in 4 months, I believe they said. So things are kind of looking not too shabby. So this could be considered a rebound. It could go higher, so who knows? And that's the thing with the stock market, guys. You really don't know what's going on. A couple weeks ago, we were very fearful of, are we going to get bombed? The market could have tanked. People were fearful. A lot of people were like, I don't know, don't get in. If you didn't get in, look what happened. Things went up. So as a side note, that's why I would actually suggest of doing monthly contributions every single month. Just put some money into, let's say, a mutual fund, like an index fund, and don't worry what happens. Now I want to share a quick news story with you guys of how the market could change a stock price. So what was going on in the beginning of this week, or maybe toward the middle, was with Johnson & Johnson. They have a bunch of products you probably use every single day, whether it's, like toothpaste, shampoo, baby powder, whatever. Speaking of baby powder, that's what the news article was about, is that they were being sued because of their baby powder. It contains talc, and they believe, and it's kind of signifying that it basically it could lead to cancer. More specifically, ovarian cancer, and they were being hit with a lawsuit of $400 million. And I wanted to just show you guys the chart of how that kind of reacted, the market, how it reacted to the lawsuit. So if you look at the stock price, of course, toward the beginning of the week, that was with the rebound, and then it kind of just went down. For this week, Johnson & Johnson, they were down 0.4%. Nothing really crazy. I was actually kind of thinking it was going to get hit a little bit more, just because that's kind of a big deal, that people could die because their product causes cancer. But again, they're fighting it. But this is, that's the interesting part about this situation. Johnson & Johnson, very, very stable company. It doesn't really shoot up or shoot down, so that's why it's kind of safe. And again, relating to the lawsuit, you could see that, when bad things come out, the stock gets hit. And moving on to the last investment that we have in our portfolio, which is kind of an experimental type of thing, is the small cap fund that we have going on. They did go up around 0.5%, our Vanguard small cap fund. And looking back to our little chart program over here, they did close $51.91, and we still are down kind of quite a bit of 2.33%. Again, these are more risky stocks, so when they go down, but if they go up, they go up. So hopefully I could show you guys the upside of that as well eventually. Alright guys, so that's kind of the overview of the investments that we have in our portfolio, the different stocks and mutual funds that we're just observing, seeing what's going on. However, a big thing that's going to happen, there is a lady, Janet Yellen, I think that's how you pronounce it, but she's the head of the Federal Reserve, and they're saying there's going to be a speech like mid-September. What that speech is going to be about is about basically the balance sheet of the United States. Basically, our assets, our liabilities, our money situation. So, a little history lesson for you right now, guys. Back in 2008, there was a stock market crash, as well as our economy got slammed. It was the Great Recession in 2008, 2009. The main reason was because of mortgage-backed securities. People had mortgages that couldn't afford them, and a bunch of them defaulted. They couldn't pay it. So to keep the economy from not collapsing, the government actually bought a bunch of these mortgages. So, this bad debt was essentially taken off the market, and they were holding it. And they kept buying it. They were buying bonds as well. So this increased the amount of these assets on their balance sheet. They stopped actually purchasing this a couple years ago, but the interesting part going on in the middle of May, I'll get to it, is they are finally trying to realize or talk about how to lower this balance sheet, because it's obviously not normal to keep it at these high levels. So they're wondering how the hell to unwind all of these assets, mortgage-backed securities. So no one knows what's going on. No one knows how to do it. There's a bunch of things going back and forth. If it goes wrong, this could trigger a correction or crash of the market. Anything could really happen. But they're going to talk about it. This is definitely something interesting because it has never been done before. The balance sheet of the Fed, the Federal Reserve, was never at this level, and now we have to drop it back down. How could you do this? Sorry, I got to talk slower. But that's a huge thing going on. So that's what I'm very interested about. If the markets like what she has to say, it might go up. If it sounds like a bad idea of, something bad could happen, it could take a beating. So that's what's kind of coming up, guys. Again, if you have any questions, comments, concerns, leave them down below. I'm still trying to figure out the format of how I want to do these videos. Next week, I might try to do like the overall market, kind of popular news stories. I want to put that in the beginning. And then toward the end, I'll just go into the individual stocks. But we'll see. If you want, you could give me your opinion to see how it goes. And if you want to see more detail of how we got it set up, I do have an announcement of me starting this. I'll leave a link in the description so you could get caught up of what's happening. I feel like I talk a lot with these recap videos. I don't know, because normally I'm a quiet guy. But I have to spit out all these facts to get you caught up and to teach you out and whatever. Anyway, don't forget to subscribe to my channel, guys. Real Life Money, where we talk about real life and money, because nobody does. Thanks for watching, guys. I really appreciate it. And I'll see you next week to tell you what's going on with the next Stock Market Weekly Recap. See you then.